So my bet is that now we can get some more softness. We can get a pullback. This CPI is not going to be like the others. I talked about this yesterday, right? The November 14th, we had massive, still oversold conditions. We gapped up, we ran. We also had December 12th, another soft CPI. This one was a little bit hotter, but I didn't care. Whether it was a little softer or a little hotter, I didn't care. We are in overbought levels now. We're massively overbought.
This short clip is presented by Club. Club provides access to Samantha LaDuc and her team of professional macro and micro traders, analysts, and educators. Club is ideal for active traders, investors, and institutions who want Samantha's best-of-breed market timing calls across all asset classes and timeframes like chase, swing, and trend. Get the trade before it happens. Sign up to Club now and get full access to daily live trading room with Samantha LaDuc, Slack trading desk with detailed analysis and trades, custom trade support when you need it, and much more. For more information, visit www.laductrading.com/club.
The real, kind of macro mover is going to be the January 29th QRA by Yellen and the February 1st FOMC meeting. And that's really the major macro movers. And then in between any Mag 7 reports that we get, like Apple on February 1st after hours as well. I consider the market kind of waiting to exhale. So long story short, I have basically this sentiment that we're going to chop about right through all of January. And that means that we can have another nice little shimmy down, right? Another shimmy down. The point is we're definitely extended. And now we're kind of coming back in, which makes a lot of sense on the Qs with the CPI, which was a little bit warm, but really not to get excited about. All right, so 406 is price target for today. Long story short, and here's why. All right, so I wrote in Chase this morning, CPI print is in and it was a tad hot. Inflation was 3.4% for the full year of 2023, which is down from 6.2% a year ago. So bravo, congratulations, White House, Fed, Treasury. Okay, but reminder, inflation compounds. So what we've had is price increase over price increase over price increase 2021, 22, 23 as it relates to Main Street, right? How they measure the economists, right? Month over month, year, quarter over quarter, year over year is showing that it's decelerating. And further, that measure, the economists' measure of CPI has now stopped, quote unquote, stopped decelerating with this print. So that's why the market is like, oh, wait a minute, the Fed's going to push out those cuts, or it's not going to be 50, it's going to be 25. However the market wants to interpret this, a quote unquote hotter CPI creates that shake and bake. So we're having a little pull down in the markets because now they're starting to price out or price lower the cuts that could come in. It's a game in my little mind of cat and mouse, and it just bores me to tears. So I will just say I'm still focused on them cutting in March. I still think that this Fed reaction function is more focused on PCE. And for now, the market is right now starting to pull back as the dollar and the 10-year rise into that 103 and 4.1% as discussed. So from a swing standpoint, it's more chop, but I think it's bearish intraday. So that's what I wanted to kind of set up for you this morning. I think that we have, long story short, this 2-hour chart is a better kind of representation. Tag your it. This was the last week of December, right? This is the February, the Friday dump into that trend line. Beautiful, beautiful kind of measuring yardstick of sentiment. We couldn't stay above it. We did back here, right? Right before the last CPI event, which was right here, the 12th. All right. Now we have a different scenario where we kind of priced to perfection. CPI has stopped decelerating, stopped in air quotes. Anyway, we got a little shake and bake here. Exactly. That this is perfectly timed. We filled that gap on SPX. We filled that gap on Qs. Now it's time for some weakness. And you can see what's happening with SPY, right? Tag your it. And it's coming back down. Filled that little gap and made kind of a nice bearish engulfing. And then of course, you can see with yields, it's got a little bit of a green bullish engulfing on a 2-hour. So we should go, hit that 4.1 area. Anyway, that's what I'm seeing. I'm seeing yields making a little pop, dollar making a little pop, and indices having a little drop. Nothing dramatic. Oh, and yes, that would actually put more pressure on gold. And remember, once we get back below 2009 continuous on the contract, it's very bearish, right? We can definitely come back down here and start to fade. And then I think the dollar, that again, 103 to 104 is a nice area for the dollar higher, gold lower, into rejection. I said this yesterday, but I'm going to say it again. Anything above this 145 is bullish USD JPY. And how we close above the 10-week also really matters, right? So it's also 145. This is where the Fed has come in and threatened intervention. And then 152 is where they have intervened. Again, they have threatened intervention, and 152 is where they have intervened. This is bullish, right? This is a bullish look. This is a worry, though, because it's so tied to our 10-year and dollar complex. So anything above 145 is bullish, this complex. I would give odds of a push higher in yields and dollar until something like intervention happens again. Okay, so that's my baseline bet. And I also showed the dollar, yen, and yuan kind of in cahoots. Right, here's the dollar on the weekly. It's working its way up. And it has to work, by the way, or it won't, meaning this is kind of a time frame congruence thing, right? So I have this thesis, and I said up here, I said the only way this is going to get moving is if it moves today, right? Otherwise, we're going to roll over. And that was my baseline bet, that we would roll over. Right now, same idea. The number, kind of that balance of the left shoulder, the head, the right shoulder. We have to move higher today, or I think we're going to have, I'm going to be wrong. Anyway, we're going to have more weakening. But for right now, it still looks bullish to me. So I'm betting on that. And last time I was bearish and it rolled over. So the big interest to me, and I do mean big interest, by the way, that's SPX during real time hours. So ignore that right now. It's not showing pre-market. FX, Asia FX right now looks bothered. It looks also a little worrisome. So this is the trend line break. That was really helpful, right, for that fall of dollar and yields, which propelled stocks higher. We've had a nice bounce above 145 on stronger economic conditions in Japan, supposedly, meaning, I kind of talked about that yesterday as well, that this right now is being perceived as bullish, this rising dollar yen. So it's doing gangbusters in the Nikkei, breaking out higher. And the dollar yen might just be going along for the ride, but it's still very worrisome, I think, that the dollar yuan and dollar yen are looking very bullish. That's usually a sign that we're going to have a yield and dollar move higher, which, as you know, is a headwind for equities. That's what I'm looking at right now. Hasn't really taken off, but you know how I am about this. I think this is support now, very solidly, this 145, and probably tags that 21 week, which is very typical, which is about 147 and change. I would not be surprised if it tags 147 and change, and then we'll see what happens. But it just matters to the direction of our equity market, right? Your puts. It matters to the dollar and the yield. I don't think they're going to get overly strong, but it bears watching, right? So that's all. Plan for that little bounce. And then as it relates to small caps, I had already mentioned yesterday, I saw this as a rollover candidate down to 190. Remember 190, and why? Because of that beautiful indicator of net selling for NYSE. It is starting to roll over. It is very extended again, overbought, but not broken. And then intraday, it did this thing, right? It dumped and then had an anemic little bounce, and then it did a big thing at the end of the day. So yesterday was very productive for showing distribution. And that is a direct hit to NYSE and small caps. And we had a lot of shake and bake intraday, but we actually had some follow through this morning. We'll have to see if it actually hits. So that's your channel, right? That was the gap fill. it filled it and then it came right back in. It's a choppy little puppy, but I think this is going to succumb to some weakness, especially if yields start to bounce a little bit. Tesla, nice action to that 225. It's actually, wow, because it gapped below the 200. That's weak. That's very weak sauce. That's actually weaker than I expected, right? So far, this perfect tag of resistance at 263.55, which was price target on the way up, big, huge bearish engulfing. Then my price target was 240.30, and it met that very quickly, but organized in an organized fashion. It got into this very, very strong support area and has just bounced, broken, bounced, and now it's broken the 200-day. Oh, all right, well, okay then. 225 is going to come sooner. But that is definitely price target for Tesla. It will have some shake and bake right here. Hold on, let me just put a little bit of a... I hate to do it. I don't like to put them on supports, but I'm going to do it anyway. Oops, there it is. So it's literally, see the low here? I had to do it from the hourly on 12.13, which by the way was CPI gap up. Anyway, that's ironic. We got right down here. There we go on 228.20, which literally is the day of this CPI move. So that needs to be taken out to head down to the gap fill. Again, it's working. This is a gap down. It's weak sauce. This is a gap down. I don't even have it marked. Samantha. Hold on. I got to fix something. Anyway, it's working. I just wanted to basically, that's already, oh no, that is definitely, that's a gap down. And this is a gap down. Maybe earnings will be productive and it will be very bullish. But for right now, it is very bearish. Get rid of that. Okay, we got two gaps on the upside. When this turns, those will be very, very nice price targets. But in the meantime, 224.5, 225. 228 tag, it's having a little bounce right into, well, let's do this then, right here. Here's the next gap. 231. That's your next level to manage. 231 is obviously a gap down, but it's also the 200-day. So that is resistance. If it gets above, it's also support. Tag, you're it. We're coming back down. All right. So the head fake. I know this is going to be an outlier call, but this is where I don't know what else to say. 1, 2, 3, 4, 5. 5-bar rule. We've gotten all the way back and filled that gap, which was supposed to be in pink, right? It's done. We got CPI, but really, it's not a market mover as it relates to, yes, we're still in a state of disinflation as economists measure, but not by Main Street measure. All right, how's your insurance premium doing for medical insurance, home or auto? As an example, food prices have come down a tad bit. I see this as a 406 tag today or tomorrow, 406 maybe by 405, maybe even by tomorrow. I just see it coming back down. How's that? 406 to 405 in the next, day or two. I really like this setup short. I really do. I'm not going to lie to you. I think just for, liquidity's sake, this hard buying in the Bitcoin complex means money has to rotate from somewhere. So what if that concentration risk in Mag 7 decides to de-risk? I want to know what happened with the 30-year auction. Like, what the heck? I mean, I know we're at the 200. We're getting above the 200. Hello. Okay, it's time. It's time. Bonds are going to have a little breakdown here. I think we got it. Below this 96.33, you got your channel here, and let's just call it 95. $1 in TLT. $1 in TLT. That's all I'm looking for. But that means that yields are getting a little bit firmer. So net selling and weakness in small caps. That's a beautiful thing, right? So we got small caps breaking below 194. That's your stop. Again, yesterday it obviously reversed right back into the gap fill. That was the risk, and now it's working. I do like this setup for strength in the dollar, which is really not clear yet. And then this little shake and bake between 410 Qs and 406. All right, market's getting a little weaker, and we actually have some of the FANG stocks going red. Gas. I love the small cap short to 192, 190. I love that one. I think SPY and Qs will catch up.
Subscribe to LaDuc Trading YouTube channel for more live trading room recap videos and other content.